change that picture right there. That picture is no longer.
You want to take a picture of the studio now and we can use that?
That's what we should do. We should show the daily progress on that picture. Because that looks good.
No, that's kind of a debacle right now.
It's a tall order to fill, by the way. That was a good looking set. You know, we got to come strong on the next one.
Gotta come better on the next one.
Okay, so tomorrow we'll take a picture and show our progress. It's embarrassing, but we'll show it.
Oof.
Hey, welcome to the Closing Beat, everybody. Happy Tuesday. Not Wednesday yet, it's Tuesday. Welcome to our show. We're financial advisors, as weird as we may sound sometimes. Here at Jazz Wealth, we picked the name Jazz Wealth because what do you know about jazz musicians? They're the masters of the instrument that they play. They can do anything on that instrument, but they're a little bit offbeat. They say things that are a little funny sometimes, and sometimes you just don't know what they're talking about. That's me. So I thought that's why we call it Jazz Wealth, right? Obviously very good, very talented, but a little offbeat at times. So there you go. I hope you'll enjoy our show here today. We've got a lot to share with you, and we're going to try some different stuff here as we build our new set over there. We'll try to share progress there as we get going, but we're plugging along. Not too bad there. Hey, our Wine and Wealth last week was actually a sneaky tax trick in your 401k that you can use if you have a company stock in there, right? You want to maybe pay a little bit less tax. You got to pay less tax these days because they're about to start coming after taxes there. I saw it today. This week, we're going to actually talk about, for our retirees or those of you that are about ready to retire or just want to learn about it, we're going to talk about a variable withdrawal strategy to save even more money, right? To actually, try to identify how you spend money in retirement. And it's not what you think. If you've used our software in the past, it's not going to be what you think. It's going to be light years better than that. So you know how I do it there. Anyways, we will knock that out on Thursday. That's how we do it. Also, right after this, we'll be posting a video on Kroger. Should you buy Kroger or not? We're going to do an in-depth analysis of that one there as well. For the stock markets today, we added a few extra points. Basically, just coming to that end of summer sluggishness there, a little bit higher. We also have the what would have been the Jackson Hole meeting, but it's going to be an online Jackson Hole meeting with the Fed. And anytime the Fed speaks, of course, we're paying attention because everybody's looking to see about this taper talk that they're kind of talking through there. If you look, I'm going to start with new home sales, actually, because I want to try something a little bit different. New home sales came out today. Existing home sales were yesterday. We got an uptick here of about 708,000. We were looking for 700,000. If you look a little bit deeper there inside of it, I'm going to do this every time it comes out now. We look at the month's supply on the market. We are now at 5.9 months supply on the market, which is obviously an uptick there. So more and more supply. The demand still is there, of course, as well. If you're looking at a new home, here's the median price of a new home. Boy, that's a lot of dollars right there. Median price, $390,500 for the month. That's coming off of $370. So prices in June, $370. Median price in July, $390. Let's hope we don't keep up that pace there. Number of new family homes for sale. This is all good news, by the way, for the home builders. We'll talk about that in a second. So we're looking at the number of new family homes for sale at the end of the period here is 368,000. That number continues to move higher. So supply, obviously, there. Maybe demand kind of washing away there after the summer. And then one fun thing I thought we could do here is look at the sales price of new homes in different categories. So at the bottom, you're going to be able to see the actual price down here from 200 to 299,000. Very few, 14,000 homes there for sale. If we go up a little bit more, oh no, that's too much. I'll just put them all on there. Why are we playing games? Come on. There we go. So we're looking from 200 to 300, 300 to 400, 400 to 500, 500 to 749, and then I think I've got 749 and above. Let's take a look there. Where you don't want to be is in the 400 to 500 category because that's actually ticking higher, as well as the ultra-rich people, or the rich people homes there, or the more expensive areas. 750 and above, that's ticked higher as well in terms of the overall price. Adding about, that new home sold, right? So 5,000 there, 14,000 here sold there as well. Other than that, we got a slight downtick here in the lesser priced homes. That's just because there's not a lot of them, I think. A lot of the home builders out there, they're really focused on the higher dollars. Take your Toll Brothers and MHO homes and things like that, or MI Homes. So that's the case there. And lastly, building permits. I want to share that with you here because building permits are always interesting. This is the potential for new homes going forward. If we look at building permits, they're actually down. They should be down. Remember, home builders themselves have decided to slow down their progress. Build on what they have, not look for new properties, new land to build more communities on. So building permits down there just a little bit. That's going to likely bleed into the rest of the year where we see the kind of slow down into the winter months, especially up in the Northeast and elsewhere. So we'll cover more of that as we go. Just wanted to see if I could share that successfully with no problems, and it worked out there. By the way, if you're looking inside these home builders, Lennar, nice strong day here for Lennar, about 2.5% higher. I said MHO a second ago because it's MI Homes. We happen to own them up a 1.5 on the day. Toll Brothers doing well. We own that one as well, up about 3%. And the last one, as I was going through our positions here, nope. I can't type today. LGI, there we go. LGIH there, also a nice day, about 2% on the day for them as well. So very helpful. New home sales is basically the short story there. If you look at the NASDAQ here, we've crossed above 15,000. In fact, it has taken 196 days for the NASDAQ to go from 14,000 up to, let's see. To go from 14,000 to 15,000 up above here. We did about 7.1% to go from 14 to 15,000, and not bad. That's a new mark there. We happen to track all of the thousands as we cross them there. To go from 13,000 to 14,000 took 33 days. Give you an idea how fast that was actually going there. Anyways, we're now less than 0.5% from the NASDAQ, overtaking first place from the S&P 500. Today, some of the reason for that is Pinduoduo, best performer in the NASDAQ, up 22% on the day. Look at the Chinese names. JD.com up 14%. Baidu also. If we take a look there off the lows, I know some of you have been itching for that to come off lows. Almost a 9% day. Not too bad there. Downtrend breakout on Splunk. Just thought I'd point that out. What I mean by that is we're trending sideways, then you have a breakout. I'm sorry, we're in a downtrend, then trending sideways, and you break out. Loses a point, right? You always want to see a breakout in the middle of an uptrend, but if you have a downtrend here, it starts to turn the corner a little bit, but consolidates sideways. Not a bad breakout. One to keep an eye on, but I just thought I'd share that with you. Booking Holdings, what an impressive comeback here. We happen to own this stock in our aggressive portfolio, and that you don't normally see that. Now, Booking Holdings, I would say if there's going to be someone that could do it, you've seen it done in the past, but somewhat rare that you see such an incredible rally back there. So nice to see that. We're happy there. If you look at the S&P 500 here, it's up nearly 20% year to date, but the rate of its gains on a daily basis is slowing down relative to the NASDAQ. Not too bad there, but still 20% right there. Basically 20% on the year. Not bad. Wells Fargo says that the S&P 500 is likely going to add another 10% by the year end. They've got a target of 48.25, which puts it off the charts there. So doesn't mean the stock market won't pull back. They're just saying, hey, we're going to go with 48.25 as our target. If you're playing along, the Pfizer that we talked about yesterday, Pfizer being very extended. If you're interested, I think I saved them. If you're interested, we were talking about the extension in Pfizer. So I shared this chart with you. We kind of talked about how often you see Pfizer as extended as it was, being over 3 standard deviations away from its 50-day moving average. Well, Pfizer started to pull back here. If you're familiar with the trade that I mentioned the other day that I put on, that trade has actually come off. And then also I want to point out Las Vegas Sands. I did not see that coming. I mean, I was very interested in trying a counter-trend trade there. Did not see it coming this fast. You actually have some easing of the restrictions in Macau. That's a big space here for Las Vegas Sands and Wynn, by the way. And some easing restrictions over there, allowing some more of the Chinese to come and gamble again. And the Chinese love doing some gambling now. So they're happy to get back over there. And obviously, we're happy to see that for Las Vegas Sands. That trade is over for me as well. So the two that I had mentioned last week is done. The oil trade was non-existent, to be fair. I have to be honest on that one. It's what it is. The Dow, if you take a look at the Dow here today, not bad. Didn't make new highs. Was one of the indices that did not break new record highs there. But if we point out a few stocks, you got Dow, D-O-W, trying to wake up out of a sideways range there. I'm not really interested in anything there. Just one of the better performers today. Goldman Sachs up about 2%, just doing its thing in the financial space. Caterpillar, maybe. It was one of the better performers. It's just the trouble with a lot of stocks right now is this. You look back to about July, sometimes a little bit further. How do you make heads or tails of what's happening here? So I'm just pointing these out on a daily basis. Like, it was weak and now it's strong. Remember yesterday we talked about that? What was weak was strong yesterday, and what was strong was weak yesterday. Well, that trend is just continuing. That's all I'm trying to say. I don't think it means anything here for new ideas for some of these stocks. Cisco getting a little extended here, one of the better performers and biggest contributors on the day for the Dow. And Cody's going to tell us about Guess the Dow. Who's our winner, or who's in the lead there?
Yeah, not too much movement today. Everyone that was on the board yesterday just slid down one spot. So today we got Tate, Jerry, John, Bia, and Jeremy on your leaderboard today. Remember, if you want to play next week, get your guesses in by Saturday at jazzwealth.com/guess the Dow.
Nice. Anything else you want to add to that?
No, I have nothing else I would like to add to that. It's a good looking leaderboard there.
Good. Okay, good stuff. Good stuff. Guess the Dow. Have a good play there. Just a fun game. I don't know if we keep it going. Do we keep it going after the summer, or was that just a summertime thing?
I believe that's your call, boss man.
Oh.
That's not up to me. I like making the leaderboard. It's kind of fun.
Okay. Yeah, well, we'll keep it going then. All right. So anyways, Guess the Dow. If you want to play along, you're welcome to do that there. I do want to share something a little bit different here. Earnings coming up on deck for tomorrow. Have I ever showed this sort of thing? Oh, we got to change it, make it a little bit smaller for you. That's the show. Let's go here. There you go. All right, coming up for tomorrow, here's earnings. Very quiet. There's not a lot of names. That's totally normal. This time of year, you're going to see some retailers in there. What I did is I put together the stats for you, as I often do, to show the ticker, the stock symbol, name of the company, when they report, so tomorrow morning versus tomorrow afternoon. History, this is a number of quarters, so 79 quarters we're using to come up with all this data over here. It had to have over 20 quarters of data for us to put it on here, so you're not going to see a couple names that are recent IPOs or SPACs that will be on there. Then we put how often they beat on earnings, how often they beat on revenue, percentage terms there. Then this is the performance over here. For example, Ulta Beauty ranks as the stock that tends to gap highest when they report their earnings. They beat 88% of the time on earnings, 71% of the time on revenue, and it has the highest gap, meaning oftentimes it gaps higher after reporting earnings there. Tends to sell off a little bit throughout the day, so it's up 2.6% as an average gap. Then the market opens, it starts to sell off a little bit, rally throughout the day. Average full day performance is the best out of all the names reporting tomorrow at about 4.2%. Volatility over here just shows you the stocks with the widest ranges on earnings. So it's a couple of the smaller cap stocks there, not too much to worry about in terms of that. If you see a name that you like on there, I happen to like Williams-Sonoma. We'll take a look and see how that does. Ulta's always a fun one to look at. You got to keep an eye on Splunk, right? Because of that downtrend breakout we just mentioned, so another reason to look there. If you like your REITs, you got Pure Storage reporting as well. Very consistent, but it does tend to have a negative initial reaction to earnings and can be a little bit volatile. Box, I wouldn't have guessed this. Box actually averages a gap down and a negative move on earnings day. I wouldn't have guessed that one there. And if you're into the sports and kids getting back to school and playing sports and all that good stuff, hopefully they're buying equipment. You got Dick's Sporting Goods. Tends to be a little bit flat around earnings, but just wanted to share that with you, give you something else to look at if you're looking for stocks to play, because it's kind of quiet. I mean, the stock market offers a few things. You got your GameStop and all that stuff. I see what you're looking at there. But other than that, you have some areas that are kind of quiet. I want to give you something to look at. And I get this question a lot. Dustin, how the heck do you track all these stocks? I want to give you a way today we're going to maybe skip the sector breakdown or go quickly through it, but how do you track all these stocks? We have over 750 stocks in our various portfolios there. And so I want to share a way with you that maybe you can start to look through stocks, or at least, get your mind wrapped around it. And sometimes what I do, every day what I do is we start at the top of the market. We go with the index, we then look down at the sectors, then we look at the stocks that make up the sectors. So we're starting at the biggest portion of the market, the easiest thing to look at. There's only 4 things: the Dow, the S&P, the NASDAQ, and the Russell. Then we go into the S&P's sectors. There's 11 sectors you can look at. Then we look at stocks inside of them. So I do that same format every day just to kind of get you to go with the flow there and see how things work. Well, one thing you can do, one way that you can look at this is you can break down an index by sector or by industry. I'm going to break it down by industry here for you today. And the way that works, by the way, is you have an index, then you have the sectors that make up the index, then you have the industries that make up the sectors. So, they thought they were making it easier, but that's how it's all done there. So what you could do is first you have to have something you want to look at. You could want to look at a sector, you could want to look at an index, or in today's case, we want to look at the industries that make up the market. And then from there, you just need a metric. What are you looking at? Are you looking at you want to see out of all the indices or industries, which industry has the stocks that have the greatest performance over the last 5 days? Which industry has stocks that are the furthest above their 50-day moving average? Which industry has the most number of stocks above their 50-day? So you're really just asking yourself, what is my basket that I'm looking at, and what's the metric that I want to see? And from there, it simplifies you or stops you from having to go just click on random symbols all the time. So let me show you one way you can do this here. Here is currently, in all the S&P's industries, we're looking at the number of stocks above their 50-day moving average. So it's in percentage terms. So for example, I'm going to go all the way off to the right here. In the energy sector, broken down into the industries here, there are no stocks, as of yesterday, above their 50-day moving average. So what would that tell you? If you were managing a portfolio that had energy stocks in there, and you knew it had energy stocks in there, you know that sector is weak. It may warrant more of your attention. Maybe you want to make sure that the stocks that you own in the energy sector are not the weakest out of all of them, but it drives your focus right there. You might look over here and go insurance stocks. 90.9% of all stocks in the insurance industry are above their 50-day moving average. What would that tell you? Would you look at that and say, great, nothing to look at, I'm killing it, they're doing really well? No, you might actually look at it and say, if 90.9% of all stocks in the insurance industry are over the 50-day, I might want to make sure that some of my stocks, if I own them in that category, are not way overbought. Remember the Pfizer thing we talked about yesterday? Do you happen to have some of those? Maybe you should peel back some of those positions or get out of them altogether, right? So just because something's doing well doesn't mean you don't look at it. But right here, just looking at this, you very quickly have a group of industries where you might take some action, a group of industries where you might be interested in taking some action, and then as you have time, you go through the middle ones there. You can see that retailers, obviously doing well, 81% over the 50-day, and this doesn't have to be this, by the way. You don't have to use this metric. You could come in here and say, I would like to know out of all of these, change this metric to the best 5-day performers. Because maybe in the insurance category, 90% of all those stocks are over their 50-day, but if that ranks as the best 5-day performance as well, now you know you have some extended stocks, right? If you come over here and all of a sudden you change it and energy ranks as one of the best 5-day performers, which I have a feeling it would if we change this, it would rank as the best. Now you know, okay, not a lot of them are under their 50 or above their 50-day. In fact, none of them are above the 50-day moving average. But over the last 5 days, they're making a beeline for that 50-day moving average. So there's energy, and I don't mean there's movement to be had. There's some energy in that industry, is what I was trying to say. So that's one way to break it down. You have to find some way to actually segment all this garbage. Otherwise, you will just kind of get lost in the mess, and it's not going to make much progress. You could also say, I'm a long-term investor. I don't really care about the 50-day. If a stock gets extended, I'm going to hold it anyways. That's kind of our view here. We may scale in and out of the positions, but you might say, how about the 200-day moving average? Well, that changes things a little bit. Energy now has 40% of the stocks above the 200-day. What does that tell you? You can look at this and say, holy cow, energy, it must just be really weak. But it can't be that weak because because 60% of the stocks are under their 200-day. That means some of them are stronger. They're not trading that low. So they've pulled back, but they haven't fallen apart, right? So that kind of visually in your head, with just looking at one number, you go, okay, there might be a discount to be had there. Remember the last couple days, how we've been talking about this energy pullback and everything? That's kind of how I find that out. I don't go look through every single stock. Once I realize there's some difference, like why is there a difference between this and this? That means there's a short-term pullback. Let's go find some ideas. That's kind of how you do it. I wanted to go back to insurance real quick. Here's insurance. So 86% of them are above their 200-day moving average. 91% of them are above their 50-day moving average. What's that tell you? There's some laggards in the insurance category there. If they're not all also above their 200-day, something's lagging behind. I better make sure I don't own those stocks that are lagging behind, or as like one of the only financial advisors that manages their own portfolios, I'm going to have some explaining to do, right? So try to think of it in those terms. In other words, you can take a bucket of information and segment it into a metric. What are you looking for, right? And so, for example, you could even go further than this. You could say, all right, this kind of helps. I get the idea. You put together this little list, and maybe it's a spreadsheet or something. I see that there's something I want to do here. Maybe I want to do something over here. Next thing you could do is rate of change, right? If you really want to geek out, you could say there are 0 stocks above their 50-day moving average in energy, but how many of them went from being 10% below the 50-day to now only 5% or very close? Is there anything making a beeline for the 50-day? And if so, I want to know those stocks. So there's, that's kind of the mindset there. And I've gone off track just a little bit, but I'm trying to help because right now it's quiet. It's easy to go, there's 6 stocks that did something interesting today. What happens when they all do something interesting? What happens when the entire S&P is flat for the day, but you've got stocks just bouncing off walls all over the place? How do you make heads or tails of that? Right now, the news is very quiet. They focus on one thing, back to Afghanistan. One thing, back to the 3.5 trillion. One thing, oh my gosh, what's happening over in Afghanistan? So it's like that whole repetition right now. There will come a time where they're going to hit a topic, leave everything else in the dust because they're trying to cover everything first. Well, apparently is what they like to do. So there you go. All right, new highs, new lows for the day. There were 28 new highs, 1 new low. Campbell's Soup out of nowhere, just been selling off. Finally broke down to new lows here. They've got a lot they're working on. They're restructuring their whole deal there, but I just thought I'd point that out. That was the only one. You want to look at Bath & Body Works. Bath & Body Works is the now separate portion of Victoria's limited brands, which was Victoria's Secret and Bath & Body Works. This is the profitable side of things. So they had a good day today as well. And I want to point out Medtronics. My data's not right for this one, by the way. Medtronics hitting new highs as well. I just thought it was a cool little breakout. Not the cleanest in the world, but you've got great volume, a move to new highs here. I think you had a couple upgrades. Needham went to 152 from 146. Evercore 144. So a handful of upgrades. And what's most important about that, the upgrades are not here. They're up here. They're off the charts. Right? So anytime you see that, it's a little bit stronger as well. Eaton also, we talked about this the other day. Tight, small, miniature little breakout in the middle of an uptrend. I don't know. There wasn't a lot on the list. Synopsis, we talked about this breakaway gap here. It did continue, and I would argue now maybe getting a little extended in that profit-taking zone. And Autodesk, nice and strong here, but a little extended. If it happened to pull back, I think this would be a stock that was goes on a pullback watch list where you say, all right, not now, but I do want to remember it. I don't want to forget it. It's on a list of 10 or something that you watch every day. So there you have it. All right, stocks in the news. There we go. Walmart. So Walmart pulling back here. They're going to start delivering for local companies as well as themselves around your area there. And they got a price target upgrade to 175 from Argus there. So Walmart's thing is called Go Local. I don't know what the deal is with that. How much money could there possibly be in that? What's the attraction? I guess just getting people to have local businesses deliver local products that were originally in Walmart, maybe. Didn't read into that one. Peloton, they're going to start selling treadmills again. I don't know. They got the change of, they had some safety measures there. They got a new Peloton that has enhanced safety measures. Okay, all right, good for them. I mean, that was a sad story to see all that, but you didn't want to see the whole company go down. So Peloton back at it there. Get yourself a Peloton if you're out there wanting to get. And also there's somebody else. I forget the name of it. There's a new company advertising a bike. And it looked awfully like a Peloton, I'm going to say. Best Buy. So Best Buy's in the news, beating on earnings by $1.09. They killed it. Back to school shopping, back to school in general, back to the office. Best Buy got all of that action there. Stronger revenue than expected. Raised their guidance going forward. Could this be the move that eventually gets it out of all of this garbage here? Right? Best Buy's had a tough time. They made it through, obviously, all the virus and issues there, but it's had a tough time proving that now they can get back to some kind of normalcy. I think that earnings might have just done the trick. I'm just saying. JD, comes out with earnings, positive comments about the Chinese regulators, which you're starting to see that now. A lot of different names saying, yep, regulations are here, and we like regulations, and we're very happy with them, and we're going to abide by them, but they're not going to affect us. And so they're trying to move the ball forward there. That worked. JD.com up 15% on the day. Palo Alto, there you go. So earnings related here, they killed it. Beats by 16 cents. Revenues expected. Raised guidance going forward. I mean, we live in this world now where this online security is becoming more and more of an issue. People are looking around. Companies are looking around. These guys are right there ready to do it. I would just say if you like the concept of investing in something like this, you might look at Juniper. And I'm not saying buy it, but it's kind of the same thing. They've got higher margins, higher sales at the moment. Anything could change there. But I think if you looked at what happened there today and you saw a headline and that grabbed your attention, maybe compare it to Juniper. See if that fits what you're looking for there as well. Because obviously that's very extended now. If you missed that, then how do you chase it? And also Camping World. So Camping World Holdings, CWH is ticker symbol, up 6% on the day. They're doubling their dividend. They went from 25 cents to 50 cents. They've been doing this dividend thing pretty quick. They keep raising it. So good for them. Obviously, if you happen to own it, that's a good thing. What else do we have? Tomorrow, you're going to have earnings from Dick's Sporting Goods. We talked about that. You saw the sheet there. You got Salesforce, be interesting. Snowflake was the one I didn't include. I'm sorry. Snowflake I didn't put on there because it is newer, and I set my criteria for 20 quarters, right? So you just have to have 5 years. That is it. I think that is it. I will take your questions if you happen to have any, see what I can do, and then get back to building stuff there. Thanks, TC. Yeah. What do we got here? Walmart and Target to be added base. Oh, by the way, I didn't mean to stop that there, but you have CrowdStrike replacing Maxim in the S&P 500. No, in the NASDAQ 100. I'm so sorry. I didn't mean that. CrowdStrike, CRW there, CRWD, replacing Maxim Holdings. All right, interesting. And Maxim wasn't, it's not like they were doing bad over here. You normally don't see that. You normally see like a Campbell's Soup getting the boot because we're putting in somebody else. Maxim was just plugging along doing its thing. But yeah, CrowdStrike going to be in the NASDAQ 100. That'll start in 2 days. Yep. 2 days. Yep. How old are you? You're not. I'm about 30 years older. EV charging, a viable investing thesis. I think it's a part of it. I don't like this. Everybody rush to EV products, right? There's a lot of moving things that you got to be in all that space. I think having some, which is tough right now, having a little bit of solar in there, hydrogen. Are we scared of that? Seems like everybody's forgotten about that. I don't like, and I get this comment a lot, just like I'm all in on anything EV, and of course there's Tesla in there and NIO and Lordstown, all this. I don't know. That's like saying I'm all in on space, man. We're all going to space. I like what Branson just did, and yeah, I'm going to buy all that. Careful. Careful. Mm-hmm. Hey, BP, which thoughts on BP stock for the next 6 months? So, looking at the chart here, what would you think? Just looking at the chart. Let's take the company out for a question here. So I know they're working on some things in Iran, and we could go through fundamentals all day long. What would you think? What I like about it, it pulled back, and this was before oil pulled back, right? Gave you a little bit of rally. This is the most recent oil pullback right here. I like that it gave you a higher low. What I don't like is right here. Let's compare it. So look at the last 5 days. Oops, there you go. Look at the last 5 days, and now look at oil, last 5 days. Look at oil stocks, last 5 days. Decent sell-off, massive recovery. What is BP doing here that it can only recover just a little bit, right? Makes you wonder a little bit, doesn't it? Makes you think that I don't need to chase it right here. So if you're thinking next 6 months you want to find a place to buy it or something, I don't know that you race to buy it right here. So I forget what the question was, but yeah. Yeah, nuclear. It's a weird thing. Some of the advertising advisors get these days. I read it just to see. I get a sort of a chuckle out of what they tell. How you tell an advisor, client comes in and make sure that the chair is by the air condition, but not too close to the air condition. It's like the stupidest stuff. Well, anyways, they're real big on like, go get a bunch of clients on this ESG investing. Supposedly that's what everybody wants. Not one person has asked me about that, either here, on the comments on YouTube, any clients. Not one person has said, what's the ESG score of IBM? And yet that's all advisors keep getting pushed there. Like, it's out with that stuff, man. The oil and nuclear and all. Nope, over here. Nope, ESG score is 0. People want to be in, they say, they want to be in healthy, environmental friendly stuff. I'm not against it, but it's like, nobody's asked me how it, it's kind of a large audience there. I'm not saying I'm CNBC or anything, but interesting. I think I'm going to win the bet on the market. I do think I'm going to win the bet. I'm not worried. I'm honestly not worried about this rally here. I do think I will win the bet. No problem, Bob. That office is empty. We should film that. We should actually show that it's still there, empty. Charlie Watts, man. Yep, sad day. I keep track of that stuff too. Sad day there. All around, you can talk about a guy, and we lost Neil Peart last year as well. I'm not putting him on the same level, of course, but all around a guy that could just feel tempo. You know what I'm saying? Like, if you're a musician, there's a difference between just having that stuck in your head and being able to feel it, bend a little bit, not be so rigid. I don't know how to explain it. It's like describing a fine wine, right? There's not a rigid set of rules. That's what I thought of Charlie Watts there, while still fitting within, obviously, the song. It was incredible, but yeah, it's a sad one. Yep. Yeah, the crypto ESG thing. I don't know. Maybe I'm just not asking the right questions, but nobody's asking here. All right, I'm gonna build the thing right there so we can get away from this wall, because this is like, come on. How long can we do this for? I appreciate you guys watching. I hope you learned something today. Try to do things a little bit different, trying to test a few different ways of showing information. Not always going to be a hit, not always going to be a miss, but I hope you learned something. We'll be back tomorrow to do it all over again, and hopefully without messing it up, kind of like we did today. Enjoy the rest of your day. Thanks for watching. See you later.